Heute habe ich einen ganz besonderen Gast für dich exklusiv zum allerersten Mal auf einem deutschsprachigen Kanal, nämlich niemand anderen als Dr. Doom. Das ist jetzt kein Held aus irgendeiner Marvel-Serie, nein, das ist Dr. Nouriel Roubini. Nouriel Roubini ist ein renommierter Ökonom, Buchautor und Professor an der New York Stern School of Economics. Sein neuestes Buch heißt Mega-Threats und darin schreibt er über die 10 größten Bedrohungen der Menschheit, die seiner Meinung nach auf uns zukommen werden. Er wird auch häufiger als Untergangsprophet tituliert. Woher kenne ich das nur? Fällt mir gerade nicht ein. Nun gut, auf jeden Fall geht er davon aus, dass wir bald die Mutter aller Schuldenkrisen sehen werden. Und das ist natürlich spannend zu wissen, was man dann macht, wie man sich positioniert, wie man investiert. Wir haben aber auch über aktuelle geopolitische Themen natürlich gesprochen und über seine Meinung zu Vermögenswerten und Investments in den kommenden Jahren generell. Bei vielen Themen, das wirst du sehen, sind wir nicht einer Meinung, wie zum Beispiel natürlich bei Bitcoin. Aber ich finde es interessant, seine Gedanken zu den unterschiedlichen Themen zu hören. Und wie ihr ja wisst, versuche ich immer Brücken zu bauen, den Diskurs zuzulassen, Meinungsfreiheit zu zelebrieren, zu leben. Und jetzt viel Spaß bei einer neuen Folge Marc spricht mit, heute Dr. Nouriel Roubini. Nouriel, hi, nice to have you on my show.
Great being with you today, Marc.
Thank you very much for your time. And before we start, I would like to introduce you to our audience in Germany, Austria, and Switzerland. You are Professor of Economics and International Business at the New York University Stern School of Business. You also the co-founder and chairman of Roubini Global Economics. And you, of course, also an author like myself, and we talk about your newest book as well in a second. And you also called Mr. Doom because you predicted the financial crash, and it happened actually. So did I miss something, or is there something we had to add to your CV?
No, yeah. Actually, people call me Dr. Doom rather than Mr. Doom, maybe because I have a PhD. And some people after my new book say you're not Dr. Doom anymore, you're Dr. Apocalypse, since I predict not only the end of the economy and financial markets, but the end of the world. So it's Dr. Apocalypse.
They call me a fearmonger as well, but hey, it's just facts, and look outside. It's crazy outside. Yeah, let's talk about your book, The Mega Threats. This is the last book you wrote, and I will definitely put the link in the show notes, and it's worth reading it. It's highly recommendable. So please tell my audience, what are those 10 mega threats, and why are you now Dr. Apocalypse?
Well, these 10 dangerous trends that imperil our future are both economic, monetary, and financial, but they're also social, political, geopolitical, environmental, technological one. On the economic side, the kind of risks we're facing today are different from those we're facing even only a few years ago. Until 2 years ago, we were worried that inflation was too low. Now we have to worry that inflation is too high. 2 years ago, we had to worry that we had a secular stagnation and lack of demand. Well, now we are to worry about stagflation, inflation, and recession because of negative supply shocks. 2 years ago, we had to worry that interest rates were too low. You had zero or negative interest rates across the spectrum for $18 trillion equivalent of government bonds in Europe and Japan. Now interest rates are rising and higher, and the risks of a debt crisis because there is too much private and public debt. 2 years ago, we had to worry about excesses of hyper globalization, while today we have to worry about the risk of deglobalization, protectionism, and restriction to trades in goods, services, capital, labor, technology, and so on. And on the non-economic factors, there is now hot and cold wars between great powers, and those are very dangerous. They could lead even to a nuclear winter. The impact of global climate change is causing more economic and other damage, severe and virulent. Pandemics are going to become more frequent. AI is going to increase the economic pie, but it's going to increase inequality and lead to permanent technological unemployment. We have this process of deglobalization, We have aging of population reduces potential growth, and we're restricting migration. And the political manifestation of all this inequality, economic malaise, young people feeling left behind, is a backlash against liberal democracy and extreme populist parties of the right and left coming to power in advanced economies and emerging markets.
So you expect actually like war in Europe and inflation and many problems. So is there any chance we can avoid all these problems, all these mega threats?
Well, on the geopolitical side, we know there is a geopolitical depression. There is already a hot war in Europe. It's a hot war between Russia and Ukraine, a brutal invasion of Ukraine by Russia. This is a proxy war between US and Europe and the West and Russia. It's not just about Ukraine. It's broader than that. It's deterring the Russian bear from then becoming aggressive against the Baltics, against Poland, against other parts of Europe. It's also deterring China from trying to become aggressive on Taiwan. This war is continuing. It's going to escalate in the spring and the summer. I don't see any ceasefire coming. And under some circumstances, this war could involve the Russian use of nuclear tactical weapons to try to stop the Ukrainian forces. And it could also directly involve NATO. It might not be a baseline, but that's definitely a risk that one has to be addressing. And of course, there is a Cold War between US and China. It's becoming colder. And eventually, on the issue of Taiwan, it could become a hot war. The Middle East is also on fire, and many failed states. And now Iran effectively is becoming a threshold nuclear state. I was recently in Israel, and Israel will have to make tough decision this year on whether to attack Iran or live with Iran that effectively becomes a nuclear power. So we are in a geopolitical depression. Those are the facts. So, each one of these threats, of course, there are potential solutions to them, but many of these solutions imply, first of all, cost and sacrifices in the short run for the common good nationally and globally. In the medium long term, there are political constraints domestically. In a world of global rivalry between great powers, achieving that coordination is hard. And politicians, whether in democracies or even authoritarian, try to kick the can down the road. Those who try to do the right thing get kicked out of power. Say, Schröder in Germany was the chancellor that did the economic reform that led to more flexible labor markets, more competitiveness of the German industry, but then he was kicked out of power. So the lesson for many other politicians is don't do tough reforms because you're going to lose power.
Yeah. So what do you think are the top 3 threats you describe in your book, and what are the solutions for them so we can give the audience some hope?
Well, there are short-term threats and there are medium long-term threats. In the short term, I think we have this deadly combination of still persistent inflation, the risk of recession because of negative supply shocks, and therefore return to stagflation, recession inflation like we had in the 70s. But now we have also very high debt ratios. During the global financial crisis and right after COVID, we eased monetary, fiscal, and credit policy. We could bail out everybody because we have the risk of deflation, not of inflation. Now we have a risk of inflation, so entering this economic slowdown and downturn, we have to raise interest rates. That implies a high risk of a recession and a high risk of a financial crisis, because right now there is an inflation problem. So that's why I think I say the great moderation of low inflation and stable growth of the last 30 years is over, and we're entering a new era of what I call the great stagflationary and debt instability and crisis. Of course, over the medium long term, I think the major threats are those longer term ones. I think the risk of war among great power is a risk that can occur in the next few years across many regions of the world, in Europe, in the Middle East, in Asia. I think that global climate change is going to become a real disaster as well, let alone other threats like the one coming from AI and the backlash against liberal democracy and deglobalization.
What do you think? The inflation, is the worst behind us, or will we see another wave of inflation? And how will the Fed react in the coming months?
Well, inflation is peaking and now falling gradually. But I think that we're going to face much higher levels of inflation on a persistent basis over the medium long term. Because the causes of this inflation recently, in the last 2 years, were both bad policy and bad luck. Bad policy being loose monetary, fiscal, and credit easing for too long. Bad luck being the three shocks of COVID and the impact on production, supply chains, the impact of the brutal invasion of Ukraine by Russia on commodity prices, and until recently, the zero COVID policy of China. But even if these shocks were to go away, in my book, I identified at least 10 medium-term negative aggregate supply shocks that reduced production and potential output, increased cost of production, and then with loose monetary and fiscal policy, they lead to inflation and stagflation. Just to be brief, 1, deglobalization and protectionism. 2, reshoring of manufacturing from low-cost China to higher-cost Europe and US, or friendshoring, secure trade rather than free trade, just in case rather than just in time global supply chains. 3, aging of population in advanced economies and emerging markets. 4, restriction to migrations. 5, geopolitical depression and decoupling between US and China and between the West and the allies of China. 6, global climate change that increases both energy prices and food prices. 7, pandemics are going to be recurrent that cause, again, negative supply shocks and bottlenecks. 8, cyber warfare. There's going to be a new version of warfare that damages production, or if you have to protect you have to spend a fortune, governments and private sector. 9, a backlash against income and wealth inequality. This is now leading to fiscal policy, pro-labor, pro-union, pro-workers, pro-unemployed, pro-partially employed, pro those left behind, rightly so. Otherwise, we'll have social strife, but it increases wage growth. And finally, we're weaponizing the dollar and the euro and other currencies for national security purposes, rightly so, to punish with trade and financial sanctions Russia and our rivals. But that may lead to de-dollarization, weakening of fiat currencies, and you create frictions in the international payment system, and that's, again, increases cost of payments and cost of production. So you have all these major supply shocks. On the demand side, central banks say we're going to fight inflation, but I don't think they'll be able to for 2 reasons. One, we're in a debt trap. There's so much private and public debt that when you raise interest rates enough to fight inflation, not only you cause a hard landing, you can cause a financial crash. We have a debt crisis for private sector, household, corporates, financial institution, and public sector, heavily burdened governments. 2, we live in a world in which we'll have structurally larger budget deficits. We have to fight a war against our rivals, cold wars and maybe hot wars. That's expensive. We have to fight a war against climate change. That's expensive. We have to fight a war to prevent the next pandemic, or if we don't do it, the ex-post costs are huge, like COVID. We have to fight a war to deal with the structural unemployment that comes from robotic automation, machine learning, and AI, and globotics, and a combination of globalization and robotization. We have to fight a war to deal with the rise in income and wealth inequality with greater social safety net. All these things are expensive. You spend more. You can raise a little bit taxes, but tax rates are already very large and high in Europe, but also in US. So spending will raise more than taxes. Therefore, deficits are larger. If you issue debt, eventually you have a debt crisis or you crowd out growth. Therefore, the path of least resistance is to monetize it and try to wipe out some of the real value of long duration, nominal, fixed interest rate debt of the governments through unexpected inflation. So Historians know that when there is a real war, there is deficit, monetization, inflation. I say there is 5 wars we're going to fight in the next decade. All of them lead to higher inflation.
Okay, so most recently you warned that the mother of all economic crisis is on the horizon. So why do you think that is? You mentioned some topics, of course, but why will it worse than 2008? And will it be the end of the fiat monetary system, or will it just be another crisis?
Well, I've spoken about the mother of all debt crises. Of course, if it's a debt crisis, there is a broader financial crisis and economic crisis. The stocks of private and public debt as a share of GDP in the world have gone from 100% in the 70s to 350 and rising in the world the last year. In advanced economy, the average is 420 and rising. And in addition to the official debt of the government, the public debt, bonded debt, there is the implicit liability coming from aging of populations and pay-as-you-go pension system and healthcare system for the elderly. And those implicit liability are probably another 100% of GDP. So these debts are unsustainable, But until 2 years ago, we had zero interest rates, negative interest rates on the short end, on the long end, $18 trillion equivalent of public debt in Europe and Japan at a negative yield, even a maturity of 10 years. So debt ratio were high, but debt servicing ratio were low because interest rates were so low because we were worried about disinflation and deflation. So we had very aggressive, unconventional monetary and credit policies. So this time around, unfortunately, with rising inflation, that party is over. So in the 70s, we had the stagflation, inflation recession because of the 2 oil shocks of 73, 79, but debt ratio were low. So we did not have a debt crisis in Europe or US. We had the debt crisis in Latin America, where they borrowed like crazy, and when Volcker increased interest rates to 20%, of course, Argentina, Mexico, Brazil went bankrupt. But in the advanced economies, there was no debt crisis. After the global financial crisis, we had the debt problem. Too much household debt, mortgage debt, banks debt, even some government debt, but with a negative demand shock, a credit crunch, so with deflation, so we could do aggressive monetary and credit and fiscal easing. Today we have the worst of the 70s with negative supply shocks that are stagflationary, and the worst of the post-GFC period with debt ratio that are actually much higher today than even they were in 2006, 2009. So that's why I worry about inflation, I worry about recession, I worry about stagflation, and I worry about debt crisis. That's why I talk about the stagflationary debt crisis being ahead of us.
Mm-hmm. So, and you think this will be the final one, the big one, the one who destroys the fiat monetary system?
I don't know if it's the final one, and you have to be nuanced, look at different countries. Different countries have different debt ratios, and you have to distinguish between household, corporates, banks, shadow banks, government, and countries. So it's a process, not one in which everything is going to implode all at the time. And this is more of a debt crisis going to be, developing over the next decade rather than over the next 12 months, even if we'll see financial stress this year and next and so on. So we are facing a fundamental debt problem. Whether it leads to the end of the fiat system, I don't know, because, there have been countries like Argentina that even hyperinflation, and after hyperinflation, they try to go to hard money. Inflation drops, they still use their own currency, but then inflation comes back. So, and there is not a clear alternative to the fiat system. Not gold, that is a valuable store of value, and people should have some gold, but it's not going to become a means of payment in a unit of account. Crypto, of course, is the mother of all scams and frauds and criminal activity. It's a joke, so it's not going to be crypto. And people say, the dollar is going to eventually lose its role as the global reserve currency. It's possible, but then you cannot replace something with nothing. And as Larry Summers recently said, China is a prison, Europe is a museum, and Japan is a hospice for the elderly, and crypto is bullshit. So what's the real alternative to the dollar? But I do think that we'll go to a global monetary system that instead of being unipolar, based mostly on the dollar as a global reserve currency, is going to be a bipolar world in which you have the dollar on one side and the euro, and then you'll have the RMB. It could be a world that is divided economically, monetary, trade, financial, investment, technological, data, information, because of geopolitics. There'll be an area of US, Europe, the West, and their allies in other parts of the world, including Asia. And there'll be Russia, China, North Korea, Iran, Pakistan, Cambodia, and some other friends in Africa, Asia, and even in Latin America. So it'll be a split world, split internet, decoupled, deglobalized, balkanized, and so on. And in that world, you'll have two major currencies for the two major still superpowers, the dollar and the RMB.
So, and where's the best place to be in the next couple of years when this apocalyptic scenario arrives?
Well, usually, portfolios are 60-40 between equity and safe assets like bonds, or 70-30 or risk parity, because usually there's a negative correlation between the price of equities and the price of bonds. Risk on, risk off, growth, recession. But that assumes that inflation is low. If inflation is even gradually rising like last year, you lose money on equities because the discount factor for equities, the long rate is higher, and long duration assets like growth, tech stocks hurt even more than shorter duration. But you also lose money on your long-term bonds because a higher yield means a lower price. So last year, people lost more money on bonds and on 10-year treasury than they lost on the S&P or European equities, because bond yields went from less than 1 towards 3 plus, and the price fell by almost 20%. So in that world, nothing is safe. Public equities are not safe. Private equity is not safe. Bonds are not safe. Credit is not safe. Cash is wiped out by inflation. So you need to go to one, shorter term bonds that reprice as inflation is higher and they don't have the same market loss of long duration assets. You want to have some inflation index bonds. You want to have gold and green metals and maybe some other commodities that are a good hedge against inflation, but also financial crisis, political and geopolitical risks. The strategic rivals of the US are going to have less dollar reserves and go into assets that cannot be seized. But now, after Russia, you can seize euro and yen and Swiss franc and pound. So gold is the only one that cannot be seized by the West. Of course, as long as it's in a vault in Beijing or Moscow, if it's in London, New York, we can seize it. So gold is a hedge against not only inflation in the basement, also against political, geopolitical risk. And some forms of sustainable real estate may do well. Because with high inflation, real estate tends to be an asset in fixed supply and tends to do better than equities. But there are good part of real estate in the world, commercial residential, is going to be underwater or burned by fire, heat waves, floods, hurricanes, you name it. So you have to go to sustainable real estate. There will be $trillions of stranded assets, even in real estate, because of climate change. So that combination of essentially short-term bonds, inflation index, gold and other metals, and appropriate forms of real estate might be a good hedge against inflation, against the basement of fiat currencies, against political, geopolitical risk, and against climate change.
And where would you buy this real estate? In which jurisdictions, which countries?
Well, I've created and designed recently a new fund that invests into public REITs in North America. Public REITs are like equities, are liquid, but we select those that are environmentally kind of safe. So I would say whatever real estate investment you have to do, you have to make sure that it's not in places where there is sea rise levels, hurricanes, floods, heat waves, damage from wildfires, and so on. So we use data at the micro level for every zip code and for every building almost to figure out which kind of a public REITs are more sustainable than others. So you have to be very careful because environmental costs are going to affect the value of many capital assets, machinery, real estate, energy sector, and so on. There'll be trillions of dollars losses. That's why central banks like the ECB and the Fed are doing a lot of stress tests on how much climate change can damage the assets of the banking system and the financial system, because there'll be lots of stranded assets over the next few decades.
What about equities, stocks in companies?
Well, you know, if inflation is going to be higher, the discount factor for equity is going to be higher. And you don't have to predict hyperinflation or even double digits. Suppose the average inflation rate, say, goes from 2% to 6%, something I think is likely given the amount of debt that we have to monetize. With 6% inflation medium term, 10-year treasury or bonds have to be at least 8%, because you have 6 for inflation and 2 real because of high and volatile risk premium. You know, and that's only for safe bonds. If you are a sovereign who is at risk, maybe 10%. Mortgages are going to be more than 10%. High yield and high grade bonds at double digits, right? But today, 10-year treasuries are around 3.5%, 10-year bonds are around 3%. So they go from 3 to 8. Last year, they lost 20% because they went from 1 to 3. So they go from 3 to 8, you have another 50 to 60% loss in the market price of those bonds, first of all. But then the discount factor for equities is going to be 8%, not 3. And in the 70s, when we had stagflation, by 1982, the S&P 500 had a price-to-earning ratio of 8. Today is about 17. So high inflation damages through that channel equities, unless you are in equities that have a lot of pricing power. Some firms may be able to increase their prices more than labor cost and input cost and commodities. So those probably can do better and maintain their profit margins, but you still have a hit to their price to earning ratios. Or in some technology sectors that are really doing very, very well and growing very fast. But last year, tech, growth, VC investments lost more like 30, 40, 50%. S&P only 15, because they're long duration assets, and therefore they're more sensitive to increase in long-term interest rates than shorter duration equities, because most of their profit and dividends are farther in the future. So tech can be hurt by higher inflation more than traditional equities as well. So it's a very complex investment process where traditional 60-40 or even risk parity doesn't work anymore.
Yeah, this is over. Definitely, it's a new time. It's a paradigm shift. So
yeah.
you mentioned gold and green metals. So do you expect a commodity super cycle in the next couple of years?
I would say even in the next decade, you know, is a key supply story. Of course, demand was weak last year because of a slowdown. Now with China coming back to growth, there'll be more demand for commodities. But let's assume global growth is whatever, normal, apart from any recession. Then the supply of commodity matters. In the last few years, there has been massive underinvestment in new capacity, first of fossil fuels, because of course we're rightly bashing fossil fuels producers because of the pollution. Shareholders, stakeholders, banks, everybody, government tells them, don't finance them, don't invest in new capacity. So that underinvestment implies that there is not enough new capacity. And even before the Russian invasion of Ukraine, Brent was $100 per barrel, and then spiked even more because of that war. It fell in the second half of the year, but mostly because there was worry about the recession. Demand was weak, but supply is bottleneck. But it's not just in energy. In the last few years, there's been massive underinvestment into industrial metals, including into production of some of the green metals, copper, zinc, cobalt, lithium, and so on. And many of these green metals are actually necessary for the green transition of having electric vehicles, having electric batteries, and you name it. So there is greenflation, because many of these green metals use a lot of energy and fossil fuels. If fossil fuel prices are high, the price and the cost of production of these green metal is high, and therefore the cost of the transition to green is higher. And even in these sectors, firms, because of either regulations or political and geopolitical problems, have not done enough investment into new capacity. So across the board of industrial metals and precious and you name it, we don't have enough supply. And that supply bottleneck is going to stay with us until eventually higher prices are going to lead with a lag to invest. But it takes time to find new mines of resources, get the permits, the environmental stuff, trying to invest the money, drill the stuff out, refine it, produce it. It takes years. Those cycles take a decade usually. So I see a decade-long super cycle in commodities. Of course, if you have a severe global recession, then demand crashes, and then prices are going to be kept low, but they'll be kept low because there is not enough demand, even with weak supply. But the bottleneck is on the supply now.
Yeah, definitely. And do you expect a recession, a global recession?
Yes, my baseline is that we're going to have at least 2 quarters, probably more, of negative economic growth in Europe and the Eurozone. The Q4 numbers were slightly positive, but Germany, Italy were down. France and Spain were absolutely up. And Ireland was just super growth. But without Ireland, actually, the Eurozone will be already in a recession. So I see the economy weakening, even if in Europe recently there have been slightly better data. The hard data better than soft data. Of course, falling energy prices has helped. Reopening of China is helping. The mild winter is helping. All those things are helping, but you still have a recession. I think that US is going to also have a recession. You cannot go to inflation of 2% without a recession. UK is already in outright recession, inflation, stagflation. Japan, it may not be in a recession, but will be anemic growth. And many emerging markets are weak. India is doing okay. China may grow faster, but many things may happen in China that might lead not to strong growth. Real estate problem, debt problem, maybe COVID spreads like wildfire now, a new version of it come out, and therefore the reopening doesn't lead to as much growth as the Chinese want. There's also a backlash against the private sector, and state capitalism is not going to lead to strong growth over the medium long term. So there'll be certainly a recession. The only debate in my view is whether it's a short and shallow recession, a couple of quarters of growth, and then we recover by the second half of this year, or whether it's going to be more protracted. And that depends on many factors.
Mm-hmm. What's your feeling right now? What do you think? What do you expect? Hard recession or soft recession?
The baseline of most people is that they'll have a couple of quarters of negative growth, Q1, Q2, then inflation drops like a stone, then central banks can already cut rates in the second half of the year, and the economy recovers in the second half. So stock markets are a little bit wobbly in the first half, and then they recover in the second half. I think that you could have a real hard landing for several reasons. One, as I said, commodity prices could spike again, and that leads to higher headline and then core inflation. Goldman Sachs believes that this year the average commodity price are going to go up by 40% because of this supply and under capacity investment bottlenecks. If that's true, inflation is falling now, at some point it's going to go back. 2, wage inflation may remain high because you have a falling population, restriction to migration, the great resignation, labor force participation falling, some people are retiring early, and unemployment is very low. So wage inflation may be stuck in Europe around 4-5, in US 5-6%. That's not consistent with inflation eventually going to 2. You may get stuck around 4-5 inflation. And in the service sector, it's mostly labor costs, and services are more important than goods in production. And then, the war between Russia and Ukraine can get worse, with further impact on confidence and on the commodity prices. Israel may attack Iran with spike in energy prices this year. So there are lots of stuff that then can affect inflation, cause additional negative supply shocks, cause a recession, inflation, and a harder landing. And then if central banks keep on raising rates to fight inflation, then you have a debt crisis because interest rates, private and public, mortgages, credit card, auto loans, personal loans, bond, business loans, and government debt servicing ratio are rising. We're not yet at the crisis level, but if inflation surprises on the upside and central banks have to raise rates more, then you have an economic and financial crisis. At that point, central banks may blink and wimp out, but if you do that, then you have a de-anchoring of inflation expectation. For a couple of years, you can use unexpected inflation to wipe out the real value of nominal long duration private and public debt. But once short rates and long rates reprice to higher inflation, then you have still a debt crisis. Meaning you can fool all of the people some of the time and some of the people all of the time. You cannot fool all of the people all of the time. If you blink and then inflation gets out of control, nominal and real rates, short and long, are higher, you postpone the debt crisis with unexpected inflation for a couple of years, and then you have a bigger debt crisis down the line.
Yeah, especially in Europe, we have high debts in Italy, in Spain, and France, everywhere, and the ECB is worse off than the Fed, for example. So, what's your take, Nouriel, on the euro? You think the euro will survive this decade, or is it the destiny to fail?
Yeah, you have debt ratio, especially in the public sector. In some countries like Italy or even Spain, the private sector household savings are high. There's a compensation for that. Well, so far the euro has survived, in part, I think, because it's also a political project. It's not just an economic. In 2015, when everybody, even Wall Street and Citi, was predicting Brexit, I said Brexit will not occur because I went to Frankfurt, Berlin, Paris, Athens, Rome, and I realized that in that game of chicken between the Troika and Greece, the Greece didn't have enough leverage, and there were carrots and sticks. Carrots being a 200 billion euro bailout package of the Troika for Greece. It was not just a bailout of Greece, but also a bailout of the French and German banks that had essentially lent the money to Greece. And while Schäuble, the finance minister, wanted Brexit, Angela Merkel decided not to because, one, you could have a domino effect with unraveling of the Eurozone, but you also had the year of the Syrian refugee crisis. And if we had the disorderly exit of Greece from the Eurozone, then that refugee crisis with millions of refugees in Turkey next to Greece would have become even worse. So she made a political decision. And by the way, there are many problems with the euro, and I've said that it's not an optimal currency area, absolutely. But in some sense, even a great economic power, uber power like Germany, without Europe and the Eurozone, Germany would not have the export market, will have massive devaluations and defaults, and geopolitically, Germany will be a geopolitical midget. So with global powers rising like China, India, and existing powers like US, the only way for Europe to have leverage on global affairs is to stay together, even if it's a dysfunctional family where some of the family members have dysfunctional behavior. Sometimes you help them rather than divorce because divorce may be more damaging and weakening you. So there are many problems with Europe and the Eurozone, but actually Europe, in spite of this crisis, has decided to do more risk sharing. NATO has been expanded or expanding to Sweden and to Finland, and the Eurozone is still sticking together with new members joining like Croatia. So eventually, if there is a real economic and financial meltdown, there'll be strains in the Eurozone. And of course, Italy, rather than Greece, is one of the weak links. But for the time being, it's not going to happen. Of course, Italy is too big to fail, but it's also too big to save, because Greece was a 200 billion euro public debt problem. So there was a Troika program large enough to bail out Greece and its creditors. Italy is a 2.6 trillion euro public debt problem. So if Italy has a problem, there is no Troika package that can backstop Italy. And they will have to restructure their debt in a coercive way or potentially leave the Eurozone. But for now, it's not yet a risk. is materializing. It could if you have a very severe economic and financial crisis in Europe and globally.
Yeah, Italy also can blackmail the European partners because they're too big to fail, like you already mentioned. So you've been...
Well, you can blackmail, but as I said, with $2.46 trillion public debt, nobody can bail you out. So a forced restructuring becomes unavoidable. Greece could be bailed out, but Italy cannot be bailed out. Too big to fail, but also too big to be saved.
Absolutely true. I agree with you 100%. So you've been very vocal against crypto and Bitcoin the last couple of years. So we've seen the smartest investors around the world, like Stanley Druckenmiller or Ray Dalio or Paul Tudor Jones, they actually are fans of Bitcoin and invested even some money. So is Nouriel Roubini joining the club, or what did they see differently than you did?
I don't join the club. You know, many people, even smart investors, became sympathetic to crypto. But look at last year, you know, from the peak of November 21, by the end of last year, crypto fell, Bitcoin 80%, Ethereum more than 80%, the other top 10, 80 to 90%, the other one, 99%. You know, out of 20,000 ICOs, 80% were a fraud in the first place, a scam. Another 70% lost all of their value. And of the 600-700 coins that are left over, most of them have lost 99% of their value. And even the top 10 crashed. Bitcoin rallied now because, you know, of course, people are hoping that the Fed is going to start cutting rates or stop. So any hope of looser monetary policy helps some of these shady bubbles, whether it's crypto or meme stock, or SPACs and so on. But, you know, those bubbles have already gone bust. And anybody who bought crypto, 99% of people who bought crypto, they didn't buy when Bitcoin was 1,000 or even 10,000. They bought it when it was 30, 40, 50, 69. So 99% of investors, including these very smart ones, lost a fortune on crypto, 80, 90%. They got totally shafted. So even the smart people make mistakes, right? You know, Sequoia, the biggest VC in the world, the smartest people, you know, they went into FTX. And there was an article written by one of the writers on the Sequoia website saying, I looked in the eyes of SBF and I saw a trillionaire. I mean, what a lunacy. Or Mike Novogratz invested into Luna, even put a tattoo on his arm saying, I'm a lunatic, and then he collapsed to zero. He was a lunatic, but really a lunatic of a mental institution. So much for smart investors.
Yeah, Nouriel, I think...
They're arrogant and many of them are stupid.
Yeah, I think we can agree that most cryptos have no utilities and they call them shit coins, of course. But I think...
It's an offense to shit. Shit is useful in agriculture. It's fertilizer. While shit coins or crypto are toxic. They destroy the environment.
Yeah.
So it's an offense actually to manure to call them shit coins. Manure is actually very useful element in nature.
Yeah, full of nutrition and everything healthy. Yeah. Yes, that's true. But that's perhaps why the investors like Stanley Druckenmiller made a difference between crypto and Bitcoin. I agree with you. Cryptos are mostly scams. But it seems like Bitcoin is one...
I don't believe in Bitcoin either.
I know.
It doesn't have fundamental value. Yeah. Doesn't have income. Doesn't have utility. Doesn't have any use in industry. So how you even price it? Something has to have either income or uses. I mean, gold doesn't have income, but it's used in industry, it's used in jewelry, was having a store of value stable over thousands of years. You know, people say Bitcoin is digital gold. It's not. It's not a unit of account. It's not a means of payment. It's not a scalable means of payment. It's not a store of value that's stable. It's not a single numeraire. It's nothing.
But it's still around after 13 years, and we saw there is a use case, for example.
So what is around? I mean, there are lots of collectible of things that we collect and keep and so on.
Yeah.
As I said, you know, it reached a peak of 69, then fell to 16, now it's around 21 or so. Big deal.
Yeah, but there is a use case. For example, people from Ukraine, they took their money and they couldn't get confiscated. In Argentina, Zimbabwe, people store a little bit of money or try to save their purchasing power.
In the past, they've gone into dollars, they've gone into gold, you know. What saved Ukraine is not Bitcoin, was that US and Europe gave dozens of billions of dollars of money to help Ukraine.
Okay. So what
Really,
do you think?
I mean,
When will Bitcoin fail? When will it go to zero?
It doesn't matter. It may go to zero, it may stay around this value. But the idea is going to go to 50, 100, 200, 1 million. All these people are saying this year should be, last year should be at 400,000. Went to 69 and fell to 15. Just they were talking nonsense. They were talking their books. Most of the people talk their books.
Okay.
They're total insiders, they're whales, they're talking their books.
Okay.
They're just bullshitting.
All right. Okay. Interesting.
Doesn't matter. The value of Bitcoin is not zero. It's negative because it has so much toxic externalities that if we have the right Pigouvian tax on Bitcoin, for that externality, the price will be negative. Wouldn't be zero.
Like oil
We have
in
to impose
2000.
that tax. Like we impose a carbon tax, there should be a carbon tax bigger than all of them on Bitcoin.
Okay.
Then the value will be negative.
So, talking about carbon tax, you've been to Davos. We talked already at the World Economic Forum, and I think you have some insights and you met very powerful people. So, what's on the radar? What was the main topic in Davos this year?
Well, the interesting thing is, I wrote about mega threats, but the talk in Davos was about the other concept that Adam Tooze and other people have developed of a polycrisis that became the word of the year according to the Financial Times. And I was on stage with the head of the IMF last month in Washington discussing my book, and she liked it. And she spoke about the confluence of calamities like we haven't seen since World War II. And the Global Risk Report of Davos of the World Economic Forum was all about these mega threats, polycrisis, economic and non-economic threats, and a turbulent and unstable decade to come. So I call it mega threats. Some people call it polycrisis. The IMF calls it the confluence of calamities. The WEF is calling it, a decade of turbulent, unstable global threats. It's all different words for the same concept. We live in a world of mega threats. And I think that even the elites of Davos are now realizing it. So usually I'm out of consensus, but now my concept of mega threats is being adopted by pretty much everybody under the sun. But everybody's talking about it. No one is doing anything about it. The problem is not recognizing a problem, but is then taking action. But the actions are costly. They take sacrifice in the short term for good and common good, national and global. Over the medium long term, most governments and politicians are not willing to make those sacrifices.
It's with your book Mega Threats. It sounds very pessimistic. So how can you keep going on? How do you think positive?
You have to be engaged with your life. During COVID, I could have gotten sick and died. I stayed in New York. I did not escape to Miami or the Hamptons or upstate. If there was the next financial crisis, the ground zero is New York. If there is a nuclear winter, the first two bombs go to New York and Washington, and the other ones to Beijing and Moscow. If there is another hurricane like Sandy, Manhattan's going to be underwater. If there's another pandemic, Manhattan's going to be ground zero like last time because of trade and people and globalization. You have to believe in your life. You cannot escape in a mountain or a cave or a shelter in New Zealand or somewhere. You have to live your life. You have to address these things, enjoy also the good aspects of life, and then try to work and be engaged socially and politically to make this the better world. You cannot live in La La Land, Every time somebody like me sounds the alarm, people push the snooze button, or they call you Cassandra, or they deny, and they sleepwalking into disaster. We live like zombies. It's time to wake up, to be aware, not to deny, not to be angry, not to be resigned, but try to take action. And that's what I do. That's what keeps me going.
Yeah. So you're talking about life. So this is a question which has nothing to do with economics or macro. So what's the meaning of life for Nouriel Roubini?
Meaning of life is to be engaged in the world. I think too many people think only about me, and individual happiness. I know plenty of billionaires who have everything under the sun in terms of material, but they're cranky, unhappy, depressing, and so on. Because in life, what gives you happiness is compassion, caring about other people, caring about your family, your community, your country, the world. We're social animals, and that's what can give us true happiness. Caring about others, not about ourselves. You can have all the material needs in the world and be still extremely depressed. So you have to be engaged. If you're engaged and you have community, you build community, you can be happy in spite of all the horrors that can happen around you.
Yeah. I feel your passion, and I think this is a great ending for this interview, and I hope we can do this again. It was great talking to you, an absolute honor.
My pleasure and honor. Thank you very much for having me.